Thank you and welcome everybody to our Industry Week. It's been our first ever Industry Week, but it is our last session today, sadly. But we've been having a great time, and thank you to our panelists, but I'm going to introduce them soon. But first of all, I want to mention that we have Malcolm Collins from Collins and Associates. So I'm going to put some questions to Malcolm today about valuations and why they are important. And we're going to round out our week with the first ever, we're making history today, with an online facility tour thanks to Storco. So welcome back, Jonathan. You were with us at the top end of the week, and it's a great way to finish off with you at the bottom end of the week. And as a bit of a surprise today, we've got Andrew Work from the Self-Storage Association in Asia. Welcome, Andrew. He's the executive director with the group, so he does the same sort of job over there in Asia. And throughout the time, I think, not just COVID, but throughout certainly my time as CEO, it's been fabulous to have the collaboration between the Asian Association, the UK Association, and Europe, which is Rennie Schaefer. A lot of you know Rennie. He was the former CEO for the Australian Association, and of course Tim Dietz over in the USA. But throughout COVID, it's been interesting how we've stayed together. It's brought us closer together, just checking in on each other. I do recall having a phone call from Tim at 3 a.m. one morning, but fortunately for me, it was 3 a.m. his time and not mine. But it was great to be having that catch up to check in on everybody. But the way the week has run for us, I'll turn back to our Industry Week now, is that I've been interviewing our various suppliers so that we can tell a bit of a story on storage as we see it in Australasia, and trying to understand what it takes to design and construct a facility. So through that, we wanted to look at exactly that process of design, construction, and then the security. And along the way, I think our members who are already operators, I'm hoping, are picking up tips on ways to improve, expand their businesses. But then people that are new to the industry, looking at getting in, I'm hoping this has been giving them some lessons on, well, what to do, where to start, and who might be able to help you out. We did start out Monday with design and construction. Tuesday, we had our construction extras, roller doors, hoists and lifts, etc., and teaching people, well, I suppose discussing with people how they might expand and top up their facilities. Wednesday, we did software security. Thursday was store management and web design. And today, well, it's going to be the complete story, and Malcolm's going to help us round that out. So before I introduce all of our panelists, I would like to make mention of our partners, our sponsoring partners for the association throughout the year, VisiBoxes and more, Storco, and we have Storco online today, Universal Storage Containers, who also took part on Monday, Storm & Software, who were in with us on Wednesday, and Southwell Lifts and Hoists, who were with us on Tuesday. So to let everyone know, we are actually recording again today. So this will be available, the recording will be available for download next week, along with all of the others. If you've got any questions for our panelists today as we go along, remember we've got the Q&A box there. Submit your questions through there so that I can pose those to the panelists as we go along. We will be playing a couple of videos today, so I'd suggest that for good connectivity, if you've got other programs running, you might want to switch those off if you want the best possible chance of being able to hear and see everything really well. Something we have learnt, and I'll just explain this to you now, that if you're actually dialing in via a mobile phone, there's the possibility that you won't hear the audio when we're playing a video. But we've had some of our trustee board members, very supportive, have been doing some of their own testing, and they've let me know that if your mobile phone goes to sleep, that's the reason you can't hear the audio. So if it's still awake, but preferably not while you're driving a car, then you will be able to hear those videos. You'll be able to hear all of this other chat that we're having, these conversations. So it's just something to be mindful of. And when we do survey all of our participants in next week, we really would like to have that feedback from you on how you accessed these sessions, and if you did have any problems, because if we don't know, we can't do things to improve. So look out for that survey, which will come your way probably on Monday. So thank you very much for there. Now, it's enough from me. I think it's time we did actually hear from Malcolm Collins from Collins & Associates. Brian, would you like to introduce Malcolm, please?
Malcolm Collins has ongoing experience valuing in the self-storage industry and providing consultancy advice for over 27 years in all Australian states and territories and throughout New Zealand. Clients include major national and state-based brands, corporate owners and institutions, banks and individual owners, addressing properties ranging in size from small stores in country towns to larger facilities in provincial centres, urban areas and major inner-city markets. Collins & Associates acts for parties in property sales or purchases made on and off market and consults to clients wishing to source or develop new sites, commence store builds or add to existing ones. The firm makes good use of its substantial information and database to undertake valuations, property research, facility benchmarking, feasibility assessments and high-level catchment reviews. Malcolm is a long-time service member of the SSAA and served on the board between 2012 and 2016. Find out more at malcolmcollins.com.
Thank you, Malcolm. Great intro there. And so I think now that we're warming up, we should get right into it and start having a chat with you. Jonathan will be engaging you later on to take us on that facility tour. And Andrew, we want to hear more about Asia from you soon, but I'll leave those until a little bit later in our broadcast. So, Malcolm, my first question to you is, why would someone need to take or have someone like you undertake a valuation of their self-storage facility? What's the purpose?
Yeah, well, Susan, generally always for bank finance or issues to do with that. And really what we're most interested in doing and presenting to banks are freehold going concerns, which is really the overall value of a property, including its land, its built improvements and its business component. And of course, those components change depending upon whether you're talking about a greenfield site or a mature site. So in essence, banks, financial institutions want to know that overall value, but more particularly, they'd also like to know what we call alternate use, which is the value of the land alone and or the value of the land and the buildings, which can be problematic if buildings are more purpose-built rather than generic. So it's basically, let's say, finance or first mortgage purposes. We also look at stuff for things as diverse as purchase or sale, as we alluded to in that entry there. We deal with a lot of people who are either looking to buy or sell facilities. And again, that involves doing that kind of valuation work so that you can work out what a facility is going to be worth for a potential purchaser on a going concern basis. We also undertake and continue to do them for asset value reporting, which could be for government, which can be for capital gains tax purposes, self-managed super fund reporting. There's a lot of that going on, and again, having had an explosion in self-managed super funds over the most recent period of time, it's always very important to get those values right to start with, because that obviously then goes to the tax office, and we're talking about an independent review of your values. So that again is very important. There's also a lot more family divestment going on these days. Everybody's getting towards my age where, you know, they've probably been working for a long time. There's the kids wanting perhaps to operate the business or needing to kind of move into management roles. So again, establishing values at that particular point in time when ownership and potentially management changes is also important as well. And within all of those component parts, we can also split out a freehold value, which, you know, would be if you had one company owning the land and the other company operating, which again is very much the standard that we have now anyway, is you can split out a freehold value and what we call a leasehold or a lessee value as well, and work out a rental value on a facility, and again through its various stages or as at a mature facility. Now, For Australia and New Zealand, of course, our model is basically all freehold. Andrew would know most primarily that Asia is basically all leasehold, where you have Singapore is different, of course, that's more freehold, perhaps Hong Kong as well, but most other areas in Asia are leasehold, which is long-term lease. So it's a different valuation process, but again, you're still wanting to work out what an overall value is to the owner and or the operator of those businesses. So yeah, that's basically the different areas involved, Susan. Yep.
Actually, sometimes we get an interesting inquiries through the office here, and people asking about leaseholds, and you know, and that's I know, as you've mentioned, there are a couple in Australia. There's not very many, but it has been prevalent in Asia at times where the lease is up and the lease isn't renewed. Is that correct, Andrew? And then the self-storage facility actually needs to move out of a premise that they're in?
Yeah, absolutely. It does happen. And yeah, Malcolm, Hong Kong, again, leasehold. And we hear that all the time where investors come to us and say, listen, we want to look at opportunities. Let us know. And freehold, if we can get it. Freehold. They always end up settling for leasehold. Everybody wants freehold. Very tough to get. But yeah, you're right, especially places like Hong Kong, where it's entirely in industrial buildings. It's a big concern that, you know, you put the money into a renovation, and then the landlord comes along and decides they can jack the rent to somebody else for more and pulls the rug out from underneath you.
The thing I like most about the Asian market is basically a vertical market anyway, and it's virtually smaller because each of the floors are so small. Mind you, so also are the average unit size of units. But I love the way that now a lot of people in Asia are looking at demountable self-storage because of the issues involved with leasehold and tenure. They're able now to move entire floors or entire facilities to other buildings. So again, that's an offset within your model, which of course we don't need to particularly worry about here. When we're talking about leasehold value, we're normally talking about a long-term leasehold, which would be, you know, 10 by 5 by 5 or whatever. It's a very different story from what your guys have to deal with over in Asia, Andrew. Yeah.
Yeah, 3 to 5 years. Yeah, 3 to 5 in places like Hong Kong. Longer in other places. I mean, it does tend to make family businesses more profitable. But when people talk about mom and pop in this part of the world, in self-storage, it's not like a husband and wife took over a small operation. It's kind of like a retirement project, or they're plucky entrepreneurs. Usually it's because second, third generation wealth, they already own the land. And so just the economics of it work a lot better for them. And you're like, mom and pop business. They're like, yeah, mom and pop are worth $500 million US because they made it in real estate 50 years ago. So it's kind of a different scene.
Yeah, and that also is the same. The vast majority of ownership throughout Asia is, if you like, equity. It is not based generally on debt these days, as much as perhaps people would like, or the Western model would like to see. So again, what you're saying is quite true. It's like the real estate is owned, it is not sold. And so therefore you can only move in and out of that real estate in a leasehold manner. So yes, it is. It's very different.
Yeah, exactly.
Malcolm, moving on now, when you're undertaking evaluation, what is it that you look for in a self-storage property?
Well, basically, an inspection is one of the most important things that can be, undertaken quite rightly. We're talking about quality of presentation. A lot of our facilities are older. They've been around a long time. They can either be basic, just drive-ups with concrete or gravel driveways. They can still do the job, but they look old, and they look something that perhaps a modern marketplace would like to see bettered over time. But again, it doesn't mean they don't work. So when you're looking at a facility, whether it's suburban, inner urban, provincial, I always look at the quality of the build, because you've got to look at that to then tell you what in fact your owner is doing, how well prepared they are to kind of make that facility look as good as it can do for its clients. Because again, if you have something that's old, you can still make them look pretty damn good, and you can make them look like they're cared for, like there is repair and maintenance. All of that is then going to kind of come through to how comfortable your clients feel to use the facility. In terms of the most modern stuff, we're going to see some of that pretty soon with Jonathan's stuff that is most contemporary in terms of the build. All of the things, though, have to work to make it easy for your clients to get into, get around and get out of the space. So presentation is very important. The quality of the build, again, there are lots of good builders around now who are all building, lightweight. There's a move to multi-level, especially in urban areas where land values have increased greatly over a long period of time. And really, with that as well is the system transparency, because it is always so much easier to value facilities where you actually have a storeman or a site link or a program like that, where you can actually interrogate a facility to know not only where they've come from, but where you think that they're perhaps going to go, because you get a good snapshot of how that facility operates. So, you can be looking at either a purpose-built facility or one that's been redeveloped. We have lots of instances of warehouses that have been mezzanine floored or whatever else to allow for the high clearance that those buildings have. They're being repurposed because they otherwise undercapitalise the land. The purpose-built stuff can be, as we say, if you have a lot of land out in the country areas, then you can afford to build drive-ups. Closer into town, you virtually become the higher you've got to go because of what we said before, the land value. So that's also important to look at as well. The trading history, the ownership, the management should all be very apparent when you're looking at facilities to, again, see how that management has run its business. Because what you're going to be selling, if you like, what I'm valuing, is what you've managed that site to a point of valuation. What somebody is going to be buying off you, which I'm trying to measure, is what that value is going to be like going forward. One way of being able to look at that is to check your transparency of your system, see where we know what your move-ins, move-outs, rent rates, NLA, all that kind of stuff has been over a period of time. And that can become problematic with a greenfield, but nevertheless, the more information, the merrier. What we're then trying to work through is coming back from your gross income on a recurrent basis, and again, trying to work that through from a maintainable occupancy situation. And then taking out your general and recurrent expenses, which are both operational and management and statutory, to come down to a net income. So all of those type of things form part of what we're looking for in your information. Also your digital online presence, that is very important in this day and age, that, everything you do is visible on a mobile phone. Because if people have that opportunity to be able to do that and then kind of move in, move out, do what they need to do, sure, it's still a per people business. The ability to do that as easily and as singly, I suppose, as possible is also important. Again, when you're talking to staff and seeing how that has transacted across a period of time, you can then understand how well or otherwise that facility operates. So in terms of doing all of that, we're also looking at what your competitors are doing as well. So I think that, in general terms, anybody in the industry that's looking at a facility can see how well or otherwise it operates just by looking at it. And that's basically all I'm doing. I'm just reiterating what everybody would be looking for, but then trying to encapsulate that in a report to give to an institution or, the people involved with the business. So everybody can see what we're looking at and why we're looking at it. And again, that's either positive or negative or whatever, but all of those kind of things get put into a valuation report for that comfort level.
Mm-hmm. So is that taking into account, all these things that you're trying to measure? Is that what you're referring to?
Yes. Mm-hmm. Yes. I mean, because, really, you're walking through a facility, you're talking to the owner, you're talking to the managers on site. And if you have the opportunity, you're talking to some renters who may be there. You get a feel for what's going on, how good the management is. What I'm trying to measure is performance. So as we talk about, as we said before, site link, R6, storeman, whoever, that gives me a really good snapshot of the historic performance. And from that point of view, you can then see how well the store has done over a period of time. Like, for example, our latest issue with COVID. There have been a couple of facilities I've valued where we can see the dips that have happened this year in particular, and then we can see what's been going on since then. So even though it's still early days and we have a long way to go through this pandemic at the moment, you can then say, okay, well, they've fared pretty well out of this, or they had a large outbreak of clients, but now those people are coming back. It's that historic stuff that gives you a good understanding of how the facility has been operating. As I say, though, we're looking forward, not back, but you've got to rely on both sets of things. That can can be translated into as to whether you've got a greenfield start, whether you're starting up and how well or otherwise you trade up from that point of view, and or at the particular stage you're operating through as well. Because as we all know, the greenfield is the most risk to yourselves as operators, as well as to the financier or the banker who is also making sure that, you know, their LVRs and everything else are kept well in check, I suppose. They're very interested in your cash flow as well as we are for that same reason. Risk is the highest at the startup. And then as we go through the first stage, second stage, third stage to maturity, obviously the risk reduces, the value increases in the business, as well as then drawing the value of those improvements along with it. So we're looking at that kind of amalgamation of value, the increment that happens through good management and operations. So there's the differences, as I say, between a maturing facility and a mature facility. There are also what I would term investment properties, which is really generally the smaller ones, 30, 40, 50 units that are out in small country towns that the local estate agent runs. Now, providing that the local estate agent understands the difference between a rent roll and a self-storage facility. In a lot of cases, they don't. They don't understand the differences in legal relationships or anything else. Nevertheless, all those things being in place, a lot of those small facilities are really where vacant blocks of land have been built over a period of time into 10, 20, 30, 40, 50 units. They just kind of crank over, producing an income for an owner, you know, who may have been a cocky, come into town, and he's retired, he needs a bit of income, whatever else. And then there are those that are run by 2 or 3 agents around town to just then continue on providing a bit of an income. Most of those, for my money, are vanilla investment. They just sit there, you get a check once a month. That's not quite the same as a going concern. So there's a bit of a different view in looking at that valuation. With all of these things, we're talking about where that break-even point may well be to when your cash flow basis change from being a negative through to a positive and then beyond from there. So all of those issues are involved with a take-up rate, which again is in terms of locked into your pricing, your unit mix, the average unit size, all of those kind of things. Now that's the type of thing we look for as we're kind of going through, and that's what we're trying to measure.
Okay. We have had a question come in from Aaron Hetchman to all panelists, but just have a listen to this, and I'm not exactly sure what he's meaning, Malcolm, so perhaps you and Andrew might have a shot at this. So valuations relating to an operator like National Storage who have a mixture of freehold and leasehold properties, how are they assessed?
Well, I'm not quite sure how they specifically do it, but if you have a mixture of property ownerships in your portfolio, that's basically what you do. If they have a freehold, you value it as a going concern freehold. If they have a leasehold, which is they may have a 20-year lease or a 25-year lease or whatever else, then you really just look at those cash flows through that period of time they are operating that facility and then work through basically what their net return is going to be as an operator. So they will be paying a basic rent for the facility they are managing, and they will then be operating as per normal. It's just out of their bottom line as an operator, rent forms a component part, whereas you as an owner of the freehold, it doesn't. So in essence, you're then saying, well, okay, they have the ability to make an income through 25 years of if you like, ownership of the leasehold, at which time their value becomes zero. So what are the cash flows, the net cash flows through that 25 years? That's basically what you're saying. Depending upon where you are in that lease term, if you have 25 years remaining, you've got a pretty good value. If you've got 10 years remaining, not so much. It's in that instance, it's similar to a motel leasehold where most of those leases are on 21 years, but usually within year 10, 11, 12, you start to renegotiate the lease. That's not too dissimilar, I wouldn't have thought, to the self-storage.
Andrew, did you have something that you wanted to contribute there?
Well, more of a question. I mean, and I guess for smaller operators, it wouldn't be as applicable. But I mean, since the question asked about National Storage, is how much goodwill would you add to a valuation like that for somebody that has a big brand and a large supportive overhead and big digital marketing operation that they could put behind that combined freehold and leasehold set of operating
Yeah, well, it would depend, Andrew. If you were valuing the whole portfolio as one, then obviously there would have to be a premium for that because of the economies of scale and size. If you were valuing them individually, then of course what's of most importance is the individual performance. Knowing, of course, that they're within a brand means they get the economies of scale that you would expect in something like that, and hopefully it would show up in reduced expenses and hopefully potentially greater return. So any brand will kind of share that type of economy where it will actually translate through to a better notional net income. That's what we're looking at. So whereas, it's difficult to say, well, because it's a brand, I'm going to sharpen a cap rate by, X% of a cap rate. That's a bit difficult to do. But what you do is look at their entire operational issues. And because they generally are much better managed and much better operated, they should then translate through to a better income line, which, again, looking at the cap rates that are around at the moment for such sales, they are at the sharper end. And if you were, in fact, then looking at a portfolio, say, for example, Capital in Canberra, which sold several years ago, they sold to the National Storage guys. We actually valued that at a premium because it was paid as a premium and above what you would have paid for the single operation. That could have been, in terms of dollar values, that was probably $3 or $4 million more than they were worth. So the sum of the parts was not as much as the sum of the whole. And again, I think that's probably the easiest way to say you either do the valuation per property or you look at it as a portfolio, and there are different issues that come to play. As a valuer, I would then to try and look at sales of portfolios where they have happened to then see if we could measure any difference. Now that kind of thing is few and far between, but again, it comes down to knowing what's been happening in the marketplace to be able to pinpoint those sales in the first place.
Okay, cool.
Yeah.
All right, Malcolm, we better keep this moving along. So I'd have a couple more questions for you because we don't want to miss out on this facility tour today. So when you're actually doing evaluation, what is it that you're actually, what does it take to complete one?
Yeah, well, look, basically, as I was saying before, it's all of those kind of issues that I was speaking about, where you go and do the full on-site inspection, you talk to management, you speak to the owner, you get all of the information that you need financial point of view to then be able to track what's been going on, graph that, and then be able to predict where you might go from there. Now, being able to present all of that information in graphical or a visual manner to a bank or to an owner is a good thing, because pictures, speak 1,000 words. What you can then do, hopefully most of the graphs on a page are going up to the right-hand side, not down, because that's then showing us that the business is doing well and over a period of time. So if you can kind of prove up that a business has been resilient over, the ups and downs of a normal business cycle, which is exactly what self-storage is, you're going to then be strengthening its value to either the funding party, because they then know that the performance is there, and or a purchaser who is really, as I said to you before, buying on hope. Purchaser will always be able to do better than you running the facility, which is why they want to buy you in the first place. So it's really looking at all of those component parts of saying, well, okay, the income is made up of merchandising, insurance sales, late fees, other income might be solar, it might be billboards, all manner of things, all that kind of information which rolls into a gross income. And again, there are percentages in industry average where you would expect those would be. There are always facilities that shine and do better than their peers, and there are others that do not quite as good. So again, it's understanding whether they're properly priced, whether their unit mix is right, what their competitors are doing and what the charging rates are, where they're leading a market or trying to be 100% full, which is a different issue from being commercially aggressive and actually pricing your product to keep yourself in a situation where your occupancy allows you to do that. So it's all that type of reviewing of information, all of the generalizations that come towards saying, well, there's our gross income, it's all recurrent, we can bank on that, and then looking at all of your expenses. And again, as we said, statutory expenses, which we might touch on later, operational expenses, management expenses. Now, whether it includes a head management fee, brand management fee, wages and salaries, all of those kind of costs, again, Now, if I have 3 or 4 or 5 years worth of those kind of costs, I always look at them because you want to see, again, whether there are any trends in particular costs and why that might be. The same as with income, why those costs or those incomes may be trending one way or another. And all of that then forms part of the evaluation process as to whether you look at a capitalisation or a discounted cash flow. So what we really want to do is get down to allowing for recurrent costs, not CapEx, not something you might spend 50 grand on doing a facility up 1 year, but you won't be doing it every year. So I'm not going to be including that in the valuation. It is not recurrent. Again, however, if a facility I'm valuing needs 50 grand's worth of work done to it, that comes off a valuation to start with anyway. So you've got to allow for all of those things under a good average management. That's a valuation term, a good average management way of valuing to try and even out those between the best and the worst. That's what a valuation tries to do. So it's really coming down to a net operating income, an EBITDA, NOI, whatever you want to call it. That is then a maintainable occupancy net income that you would expect that facility to be able to either is generating or should generate.
All right, Malcolm. So you probably touched on something there that's tweaked my interest. So, are there, you talk about perhaps facilities that may be in need of a makeover, but, are there opportunities out there now that are still existing for investors who are looking at getting into the industry?
Absolutely. Absolutely. Yep. I say it without equivocation. Absolutely. I've been saying this for 30 years. There is always opportunity. And again, we all know that self-storage is resilient. We used to say years ago it was recession-proof. Well, I wouldn't say it's recession-proof anymore, but it is definitely resilient. In this economy where everybody is chasing income, where everybody is chasing safety, we've seen the explosion of interest in big box industrial and distribution centres, all that kind of thing that's servicing e-commerce. In a similar way, self-storage is an attractive cash flow because it has 200, 300, 500 people. They're not all going to fall over overnight. You're not going to get one big lessee move out and then have a building vacant 12, 18, 24 months. It is a recession resilient investment which provides a recurrent cash flow that you as an owner can hopefully rely on, but it is something that if you have good management, and that is what it's all about, good management to maximise income, minimise expenses, you will have a good facility, whether it's 50 units or 500 units or 2,500 units, for goodness sake, that I've also valued as well. There will be a purchaser for any of those sizes, and there will also be a vendor because, again, as I said to you earlier on, people getting to my age have had enough and perhaps want to get out, they want to pass it on, or people like our majors are, of course, always looking at all the markets in Australia as well as in New Zealand to buy facilities because they want scale, they want economies, they want all of those kind of things to maximise their return. So if you have a facility that is in the right location, and that could be a catchment of 2,000 people, 10,000 people, 50,000 people, depending upon your competitors, where you are and what you're offering, you will have a saleable asset. As we're now seeing more people moving to provincial centres, say, for example, here in Melbourne, Ballarat, Bendigo, Shepparton, all those places that are within an hour, hour and a half, 2 hours of the city are seeing population growth. It's going to continue to happen, I believe. So people who are in the provincial or country areas have had good assets. They're now getting increasing value assets because hopefully, and again, if you looked at pricing, one of the reasons that pricing is higher in the city is because land value is higher. So, if you looked at concentric rings, if you're out in the bush, you wouldn't be charging as much money, anywhere near as much as you would in urban areas because your market doesn't allow for that. But at the same time, it's returns on capital we're also looking at as well. So yes, unequivocally, there are opportunities. I'm getting 3 or 4 phone calls a week, and I'm dealing with a couple right now doing just that.
Malcolm, I think Jonathan's got a question for you. Jonathan, did you want to? Yep, there we go.
What cap rates are an A-grade facilities selling for at the moment, and is there a difference between Australia and New Zealand?
Look, I think that I was saying recently that in my view, the new black is going to be somewhere between 6 and 7% for mature, cash flow rich, quality, good size facilities. You know, a lot of the cap rates now depend upon, you know, the interpretation you give to the sale and understanding where that property was in its trading history. On that basis, and I'm not talking about an initial yield, which is where you buy something when it's passing income. I'm talking about something that is at maturity. And I think that, you know, the cap rates there, as I said, are basically between 6 and 7%. Now, there will always be outliers to that. There will always be, you know, facilities that are valued at a higher cap rate. And again, as I'll reiterate, a higher cap rate is a lower value because you know, you just say, well, 10%, 100 divided by 10 is 10. It's a factor of 10. 7% is a higher factor than 10%. So the figure that you use to capitalise the income line, yes, sharper cap rates, they are happening because there's the huge weight of money chasing these assets and these investments, Jonathan. So when you look at a comparative price on a major industrial or a major retail that is still retaining its value because it's you know, based around a supermarket or whatever else like that. So, or a service station where, again, a recurrent type of income there, those cap rates are coming down. I think that there's always been a capitalisation arbitrage between Australia and New Zealand, but I think that gap has closed appreciably between the two countries. And I would think that, again, cap rates in New Zealand are relatively similar to what they should be here. The last one I valued in 2019 in New Zealand, I used a cap rate of around 7% on the particular facility. Again, unique circumstances, but looking around at the sales I knew of then, and there have been several that have happened since of urban facilities, those cap rates have sharpened. So again, without doing some very direct due diligence now to absolutely be on top of what's gone on, I'd say yes in general terms, because we still have very similar marketplaces. We just have different countries. We just have different values, land values, pricing, but the basics of the industry remain the same.
So, Jonathan, you do know that you've cracked open something here that Malcolm could talk about until tomorrow. And so yes, we have to pull you up on cap rates now. I know that's everyone's favourite topic, but the other...
And you'll remember, of course, that the valuers are always wrong. So we always know the last one. So anyway, there we go.
Look, but one thing we've been getting inquiries of to the office now, and no doubt this has been happening to some of our operators as well, is they're now receiving their ratings notices. So if you've got some advice for our viewers today on that, and then we're off on a facility tour with Malcolm. So away you go.
Well, I'll keep it sharp and sweet. Yes, get some considered advice from somebody who understands how you operate, but also at the same time be aware of council rating valuations are not used to establish market value per se. They're there for rating purposes. And a lot of them use markers that are different to what we would suggest is a reasonable going concern market value. For example, we had some clients last year in WA who had pretty bad, they call it gross rental value in Western Australia. And that includes not only the notional rent or the rental return from this facility, but also includes several expense lines, including GST. So they come up with this strange basis of assessing a value, which you have to be aware of the mechanics of how you operate as a self-storage, but then also have an idea of how the statutory valuer has to see these things, because they are restricted by the laws of their state or their land. And here in Victoria, well, you can either be a net annual value or a capital improved value, depending upon which basis councils use to strike their rates on. So all of those issues are something where I would say to people, and again, other issues where facilities have been strata titled, where they've had 50. Each of their units has got a separate title. Well, each one of those under particular jurisdictions is separately rated. So they're separately valued. So those values can be very different from what your overall freehold worth might be, let alone its rental return. And they're all the kind of things that statutory valuers are restrained by given the particular state laws or whatever they have to value within. So I would really say to people, get some advice. I'm looking at one right now in Victoria, the very same reason, where the value that the council have put on it, again, they've assessed a net rent, and I'm not quite sure how they assessed it, but it wasn't on a going concern basis. So that's where you then need to understand the alternate use value of a property, its land value, its value, added value of buildings and improvements, to then get into the head of understanding where that statutory valuer comes from.
Okay, so the bottom line there is seek advice by the sound of that. Thank you, Malcolm.
Get advice. Get advice.
All right, so we're going to leave you there but don't go away, Malcolm. Please.
No, thank you.
But we're going to jump from Malcolm now. We're going to pop over to have a chat to Jonathan. I'd like to introduce Jonathan Layton from Storco Storage Systems. Brian, could you do an intro, please?
Hello and welcome to the first ever Self-Storage Association Virtual Industry Week. My name is Jonathan Layton from Storco Storage Systems. We manufacture and install world-class partition systems and building systems throughout Australia and New Zealand. We've been operating for over 40 years. I hope you enjoy this brief tour of our production facility.
Thank you. Now that's interesting. That we've been through the factory now. I think now I want to see what you've done, taking all of those materials from the factory, how you've bundled it all up and turned it into a self-storage facility. So we're going to go on our first ever, and I think we've got two to show today, online facility tour, thanks to Storco. So Jonathan, we're going to hand over to you to take us away, please.
Thanks a lot, Susan. So I've got two facilities today to show you through. We have got the new Store Local site, which is only opened in the last month or so in Cranebrook, which is in Western Sydney. And we've also got the new Storage King site in Pinball, which is the northern suburbs of Sydney. It's a new 6-level development. The Cranebrook site is a new 3-level development, and we'll be starting the tour. This is a bit of an image on the screen. The site's not actually, last time I was on site a couple of weeks back, it wasn't quite finished, so I don't have a photo of it, but this is a artist rendering of it, provided by Storco, who did quite a bit of the design on it. So we'll get into to show you around on level 1.
Wow.
So we've shot through here onto level 1 now, and we're in the lift lobby area. You'll notice a suspended concrete floor below us. So it looks like a ground floor, but it's actually part of the...
Oh, I see. So you're not on the ground floor, you're up on you're calling it first floor.
Yep, up on the first floor here. You can see the firewall there, fire compartments, and then the nice area in front of the lift, space for loading and unloading. And then this is just the Storco, standard Storco typical, our V5000 hallway panel system.
Mm-hmm.
We've got on this job, it's got our cyan blue doors, which is a colour specific to us that we developed for a particular client requirement, but we've found a number of other clients have liked that colour. It's got our rounded checker plate corners, aluminium bump rail protection, and a mix of both swing and roller doors. We'll head down here and you'll notice on the doors, there's no door latches. They're just the little black keypads. So this facility utilises the new CAS system, keyless entry system, that Storco has developed in conjunction with Sentinel, Jason Keane from Sentinel. And it's a new state-of-the-art system whereby you have a keypad on every door that can be opened via a fob, a PIN code. So for those who don't like apps or your phone's gone flat, you can just walk up to the door and PIN code in. The doors are pushed to open, so they don't need a handle. You just touch the swing door and it pops open. With the roller door, the latch just slides open and you're free to push the door up. And we can walk inside a unit here and you'll see that we have a push to exit button on the inside of the unit too. So in the very unlikely event of someone walking past and shutting you in your unit, you can easily escape. So we can now take a bit of a walk down the corridors, mix of unit sizes. On the first floor, the biggest unit's probably around a 4.5 by 3 from memory, 3 by 3s, and then unit sizes down to 1.5 squared, which we were just in.
Excuse me, Jonathan, does the panelling go all the way up to the ceiling there? I'm just seeing something a bit different that I'm not familiar with there. You've got...
There's actually, if we spin around here and have a look up, can you see that mesh?
Yes.
That was part of the fire and smoke detection system that was needed in the building, so that in the event of a fire in a unit, the smoke flow can get out to the smoke detectors. So yes, this one has got probably the highest option we offer with mesh, in the fact that it's all powder coated. Yeah, pretty the best option you can take there.
So are these roller doors a higher than standard height, or is that the regular? But because the unit height inside looks higher than what I would expect it to be. So it's probably mainly just the way the image is coming across. Sure.
I believe these are standard door heights at 2.2 high.
Okay.
The partitioning is about 2.8.
Right.
So pretty much a standard height partition. Nice polished concrete floors on this site. And one other interesting thing they've got on this site is some nice little louvers, glass louvers.
Room with a view. Very nice.
Right. Yep. And you'll also notice that you'll see the lighting track up the top. The Storco custom folded lighting track, all made in the same colour as the wall panel, and a lightweight mezzanine floor above.
Okay.
So
are we going to head up to upstairs now?
Not on this site, but we will on Storage King at Pinball.
Okay.
I can show you up here just a quick walk through an inside of a roller door unit.
Yes.
It's actually, you see the mesh better from inside a unit where you can actually stand back. So these walls are all done out of the Storco Safeguard panel.
Yes.
It's a adjustable width, fully interlocking sheet. So you'll see there's no fixings or rivets or screws or anything floor to ceiling, so no one can catch their hands or boxes or rip a box or something. But you can see the inside of the mesh up above the roller door there. And I think in the next little view here you can see it. Yeah, that's probably a better shot of the mesh.
Yes.
And you can see your little keypads again for the CAS system. One other advantage of the CAS system is that it's completely trackable and openable via the app anywhere in the world. And you can actually share a key with anybody you choose. So if you had a removalist coming to load materials into your unit next Tuesday at 2 o'clock, you can set it so that they'll get an email, the ability to download the app and access that unit just between, say, 2 and 3 o'clock next Tuesday. Or if you had employees, they could access it just certain hours, and there's a full track log as well, so that you can see who's accessed the unit, how they accessed it, when they accessed it.
Jonathan, I've got a question from one of our viewers today, Deb Redelman. is asking, why would the facility want both roller doors and swing doors, rather than just the one type? Why is it that people put in both types?
It's typical to put both. In most facilities we build, we would do both. Roller doors give you better access, but they are more expensive than a swing door. So rule of thumb on most facilities we would build, you would have a roller door on any unit that is, say, a 3x3, 9 square meters and up. Anything smaller than that would have a swing door. I think it's mainly around price. We are actually seeing probably a bit more of a move towards more roller doors, just because they are more functional. They don't cross out into the corridors. But generally still the mix is pretty much roller doors on your 3 meter wide units and upwards, and swing doors on the smaller.
Is it also, there's some just preference by the facility on the different doors that they like themselves?
Yep. Sometimes you'll see if the partition height, if you're going into an existing building and the heights are really low, sometimes you don't have the height for the roller door drum.
Yes.
And you might end up with swing doors on bigger units. But I think you'll find nearly everybody in the industry would say that if there's no height restrictions, they would prefer roller doors on anything above about a 3x3.
Sure. Okay. All right. Are we?
So we can move on now to the pinball. So I'll just show a photo here. You can see the keypad's lit up. So how that works is you just put your finger over the top of the keypad and it lights up so you can actually see your numbers. It's off the rest of the time just so it's not using energy.
Sure. Okay.
Now we'll come across to the Pinball Storage King. So this is the front of the site.
Very classic building.
Yeah, new custom built 6-level site.
Wow.
So in the glass here, there's different colours on every floor, which we'll see as we go in. But we'll start now. We'll have a quick look in the office here.
Okay.
Very big, spacious office.
Sure is. They've got a big box shop there, haven't they?
Very big box shop. A lot of consumables, bags and things. So then we can head out through the office into the parking area at the back, where you'll see the lift over here to the big. That's a very big, like a full-on elevator, not just a hoist. That one, stainless steel doors going up 6 levels. You wouldn't get that with a standard hoist. You can see the entry gate over here with the keypad. This site's opened. I think it opened about a month ago, if that. 3 or 4 weeks ago, and so we're coming in here now. These doors are higher, Susan. I think that doesn't actually look any higher. One of the reasons is this one's got quite wide corridors. A lot of these corridors are at least 2 meters wide.
Okay.
The Cranebrook site's the industry standard 1500. A lot of these are 2 meters high, 2 meters wide, and all the roller doors are 2.4 high through the ground floor here with a 3 meter partition. And you'll see up here the speakers for the sound system through the building. So can be nice music playing, or the radio, or whatever the developer wants happening there.
So Jonathan, just while you're there, before you move off there, I have had a question come in, and it's from Paul. He's interested in knowing about the central ceiling channel and lighting track. Is this a standard feature, or is it custom designed for these facilities? It's
a custom product that Storco make. So it would probably go into about 70 or 80% of the facilities we build. You would have seen it at Cranebrook, but it's a gloss white lighting tray that we develop just to suit the whole system and complement the fit out system. It's got angles on the side to throw light into the units, and it's been developed over quite a few years. Okay, so lighting, you're saying the smoke detectors, the speakers, everything that's electrical, I suppose, is going to run through that? That's correct. So what they typically do is run power down one side of it, and their security and other things down the other side. That keeps them both separate as well. And it's not a big, ugly galvanized tray like you do see around. Yes. This one's got the Storco rounded corners and the 2 rows of hardwood timber on this one, as opposed to the aluminium that you saw on the previous site. Okay. Is there a reason why? Was it just customer preference once again? Pretty much customer preference. Storage King typically go with the 2 rows of timber.
Right.
Yeah, it's just personal preference. You can see how wide those corridors
I
are
can
there.
say they're very wide corridors, aren't they?
So it's really, really giving great access to these units.
Mm-hmm.
And I'll go up a floor now.
So is this ground floor that we're on now?
This is on the ground floor.
Sure.
Then we can move up here into the first floor.
Yes.
And it's yellow.
It's different colours.
Different colour. You've got your Storco mezzanine floor above on this one. So while it's a 6-level building, it's a fire engineered solution that's got a mix of lightweight Storco floors and suspended concrete.
Mm-hmm.
This site is pretty got a lot of options that people wouldn't always put in a facility. As you can see, there's a motion sensor and a light in every unit.
Oh, okay.
Which is a bit of a luxury that you wouldn't too often see. And a bit hard to tell in the video, but the photo, the partition height is set down. Instead of the vertical mesh, which you saw in the previous facility, this one's got horizontal mesh over the units for your smoke detection.
Oh, okay. Mm-hmm.
So once again, you can see a range of unit sizes. The floor's painted in the corridors only.
Mm-hmm.
Obviously, you don't normally see that. They're just open to give a bit of an example of the different, of how it's done and what the units look like inside. You'll also, with the Storco mezzanine floor, you'll see the column here hard up against the wall. So the columns are all integrated into the wall, so you don't have columns in units, and the same with all the bracing and things like that.
Oh, that's a good idea.
So that's the yellow floor, which is level 1. And then we can jump up to the next floor, which is the Storco Spring Green. It's another colour that we developed actually for a customer in France.
Okay.
And it's been very popular in Australia as well. But once again, very similar to the previous one, except we're now sitting on a timber floor, as you can see, looking into the units, and a suspended concrete floor above. Nice wide corridors again. I'm not sure how our time's going, Susan, but I think
I think we've probably we're going to run over time. Oh, so that's interesting. That's their lift.
Yep, that's the lift area, and you can see how much space there. This is about 3 metres plus wide, all in this area here. Plenty of space and some bigger units by the lift. I'm not sure what that is, but it's probably a 6x3.
So has this facility been fitted out all the way through to the 6th floor, or have they done some and they'll come back and do the other levels at a later date, depending on fill up?
We've just done 3 floors at the moment.
Yes.
There's 3 more to fit out.
Yes.
But from the outside, we have actually fitted out the units just where the glazing is, so that from the street, it looks complete.
It looks complete, yes. Okay. All right, Jonathan. Well, that's been absolutely fabulous. Thank you. I know that's taken a big effort, and I really appreciate from the association that you're taking the time to put that through. So if you would, I don't think anyone in storage can ever get enough of going on a facility tour. And now that we've been able to bring this to you online, if you would, there's some details there. If you would like to go for another walkthrough, please contact Storco. They'd be happy to take you on a journey again of those facilities. So there's an address there, contact jasmine.smart@storco.com.au, or contact the association. That's fine as well. And we'd be happy to pass on those contact details. But thanks once again, Jonathan. So the next thing that I want to do is, please now, Andrew, you've been very patient, but we've got a couple of things we want to tell our viewers today about. Brian, we've got a couple of conventions coming up. We've got the Australian one, which we've postponed, and now it's going to be in March 2021, and it will be an online convention. We've got a short promotion for that one. Brian, would you like to play that, please?
Join the global community of self-storage professionals for the first ever virtual SSAA convention, 9th to 10th March 2021. The SSAA is bringing the industry together with the latest technology and interactive tools from the comfort of your office, home office, or wherever you choose. You will be able to grow your professional network, Learn from engaging keynote speakers, gather research, strategies, and best practices from engaging online sessions, and visit our virtual trade area for information on the latest self-storage products and services. SSAA Convention 2021, coming to a web browser near you. Register now.
So that's our convention next year. But before that, we have the Asian Expo coming up, and I'd like to show you that so that then we can introduce Andrew from Asia and just talk a little bit about the Asian market while we've got you here today, Andrew. So, Brian, can you hit the Asian Expo promo?
Can't wait to see you in November. In the meantime, stay safe and have a great day.
So, Andrew, that's not far away. That's probably 3 weeks. So I don't know how you've got time to be chatting to us today, but I'm very grateful for you taking this time out now. We would like a little bit of a roundup on what's going on in Asia. What do you represent as an association? I don't know how many countries and how many languages that you must have to manage across every single day. But give us a bit of an overview, please.
Yeah, so I'll be quick because I know we're running against time here, but I'll just somebody know. Susan talked at the beginning of this about the cooperation between Europe, Asia, Australia, US. The Europeans had the first online thing. The guy that ran that shared with all of us all the mistakes he made, and I'm going to make a whole bunch of mistakes. And so by the time it gets to your expo, Susan, you're just going to yours is going to be perfect, I'm sure. So I'm looking forward to yours more than I'm looking forward to mine in 3 weeks. That being said, I think ours is going to be great because there's a lot going on. It's still, I'll just give people a big picture because it is our members go from Japan to Jordan in the Middle East. We've got members in Dubai, Bahrain, and then, all the way down Australia, New Zealand. Of course, we don't want to step on your toes too much. We are the margarine to your butter in Asia because we're quite new. But our biggest market, of course, is in this part of the world is Japan. It is also the most mature. And there's a lot going on there because I only joined in November past, and I noticed this huge explosion of new places opening starting in August in Japan. And part of that was because they finished all the construction for the Olympics, which of course had been delayed. So then a lot of that general construction was then able to come back to the industry and finish up a lot of projects that were in a bit of a slow go. So there's a lot of new projects coming online in Japan, and the quality of them is a lot higher. They're really taking steps to upgrade the quality of their facilities, which is something we need more of in Asia. So for example, smart locks are just barely starting to catch on in some of our markets up here. After Japan, which is by far and away the biggest, Hong Kong is actually quite vibrant. You would think Hong Kong and Singapore would be similar, given the way the cities are laid out, given the levels of income and everything. Singapore, fewer operators, but bigger operators. The market's more consolidated there. I see Malcolm nodding his head because he comes to our expo every year and he knows Asia very well. But in Hong Kong, it's really fragmented. But we are looking at a wave of consolidation in Hong Kong that is being driven by the regulatory changes in the regulatory environment. I know you guys, even in Australia, you guys know about the big fire that we had years ago. And I've heard that the regulatory impact of that has spread from Hong Kong to Taiwan. Regulators looked at it. I've had even people in Australia tell me that even they were looking at what happened there. A lot of the impact of that is just being played out now 4 years later. And a lot of operators are trying to either sell or merge. So there's going to be a lot of really interesting opportunities there. A lot of them are being forced to renovate to comply with new regulations that, they kind of fought it as long as they could, but no more. So that's going on. Thailand has got new places opening up. India, we've got 2 members in Mumbai and one in Bangalore, one in New Delhi. Chennai, we've got one of our members, software operator. He says they have 2,500 searches a day for self-storage in Chennai, not a single operator, right? Wow. Even though people are Google searching for it. They're huge cities in India, and admittedly, the income levels are really low, but There's a thin cream at the top, and that's what you want to get. Our two operators in Vietnam, one in Ho Chi Minh and one in Hanoi. One is valet, the other one's proper self-storage. They're getting the kind of the highest income people of theirs in the beginning of a middle class in Vietnam, which is growing quickly. So, and I mean, they both want to grow really quickly because they see the opportunities. One European, one American. I mean, it's really funny that, because they're familiar with it, they introduced it there. So there's a lot going on across Asia. I've just kind of given you some of the highlights. And I guess the COVID story is probably a lot like what you guys have in Australia, where everybody was worried that it was going to kill their business. And it's held up surprisingly well. Those who were empty are finding it hard to fill up and get new customers, but people who were already full, business is like very steady. And where there's been a lockdown, some of them were quite severe, like in places like Malaysia and India. When the lockdown was lifted, they got a flood of new customers coming in. Right, they were all doom and gloom and thought it was going to be the end of the world, and then had this surprise rush of new business as people cleared their homes out for work from home and homeschooling. And I think you guys have seen some of that in Australia, and it's a similar situation in our cities up here. But where we didn't have that was Hong Kong, because we didn't have that severe lockdown in Hong Kong. What we did have were restrictions on restaurants being able. So your restaurants were told they had reduced their seating by half. Where are they going to put all those tables and chairs? So there was a little bit of a mini boom from that sector. So we've really had to pinpoint where we can get business. And some, Thailand, it was if you were close to a hospital, you sent one of your sales reps over to the hospital and said, where are you going to store all your PPE? Boom, new client. So I'm just hitting the highlights really quickly, just to let people know what's going on. And we're going to cover all of that. Plus, we're going to have an investment forum in the expo, one whole day where all we talk about is investment.
Mm-hmm. So it's certainly been a busy time in Asia, and I think this will continue as the market develops there. It's fairly immature in most areas, you would have to say, listening to what your comments have been today. So that you'll expand on much more when you get to present online in what's about 3 weeks' time, isn't it?
Yeah. I mean, it is, like I said, immature, but there's a lot of money. There's a lot of interest from the investment community. I mean, you guys know National Storage. It was Daw Capital Partners out of Hong Kong that kicked off the bidding war, followed by Warburg Pincus' Southeast Asia. Warburg Pincus is trying to knit together a truly Asian brand, and they just announced another takeover in Shenzhen, across the border from Hong Kong, Shanghai. They've done Malaysia, Singapore. So there's a lot of action happening. And so it keeps me on my toes. And like you said, I gotta handle it in multiple languages. We're gonna be doing our event with all Japanese and Putonghua or Mandarin Chinese. So those are the big ones. I don't have to do Thai and Laotian and Bahasa. You can only do so many, can't you? You can't possibly cover off on all of those barriers. But how do your office must be able to cope with all of those different inquiries that you get? That would be an interesting challenge for you. Yeah. It's we especially like Japan has its own national association that's very strong, and we work very closely with Yoshida-san, and we have an arrangement where all their members become affiliate members of the Expo Asia and get benefits and interact with us. And I do a lot of Google Translate in working with the Japanese, but of course I have Chinese language capability in-house, so we make it work.
Excellent. All right. Well, look, we are drawing to a close. We have gone over time. I apologise for that. But can I just ask you all to, well, certainly Malcolm and Jonathan at least, and we will share contact details of all of our panellists today. But Malcolm, could you just give everyone your mobile number, so in case anyone would like to ring you immediately?
Sure. I'm not certain that I'm that much of a hot property, but yes, 0412 476554. So 0412 476554.
Thank you, Malcolm. And Jonathan?
Yeah, 0429 836 510.
Okay. And Andrew?
Attendance. It's been a good session.
Yes, it has been brilliant.
And Andrew, just quickly, your email address probably is best, or a web address?
Sure. Very easy. Andrew Work, my full name, and it's just WORK. That is my real name. Andrew Work at selfstorageasia.org. And I dropped my mobile phone number in there if you want to catch me on WhatsApp or give me a ring.
Sure. Okay. Well, thank you very much. Brian, have we got anything else we need to be doing now? All right, thank you. Just fire away.
Are you ready to get ahead in the storage industry? The Self-Storage Association of Australasia membership has its perks. Membership connects you with peers in the self-storage community, along with providing access to a wide range of high-quality benefits and services. The SSAA helps improve your business and build credibility, which in turn makes your business shine in today's competitive market. Visit selfstorage.org.au for more information.
Thanks, Brian. And as we're about to wrap up, I want to remind everyone it's been a big week. We have recorded all of these, so you can catch them later if you didn't get to the end of any one of them. Some people, unfortunately, had registered, weren't able to attend on the day. So there'll be a whole suite of these available to our members and non-members alike. And remember, our next webinar, which will be State of the Industry. We have two guest panelists in Michaela French-Castelli and Sam Kennard of Kennard Self-Storage, and we'll be discussing our State of the Industry 2020 report and looking into the market. That's in a few weeks' time. So that will be advertised, I think, come next week. So thank you very much for everybody. Thank you, Malcolm, for lending us so much help with regard to evaluations. Jonathan and that fabulous 2 facility tours, and Andrew, the roundup in Asia. Thank you, gentlemen, and goodbye.
Thank you. Goodbye.
Thanks, Susan. See you.
Bye.
Thanks, Susan.
Bye-bye.
Bye-bye.
Thank you. Bye-bye.